Hi traders and welcome to the technical analysis market wrap on Friday the 9th of September. So I've seen some really good moves this week. A lot of the key levels that we've been talking about over the last few weeks have been hit, and we've seen a rebound of sorts on most of the majors this week. So we'll jump straight into the charts, see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD, and you can see that we had that good bounce off the 67-cent mark. This is a level that we targeted over the last few weeks. The head and shoulders pattern effectively played out the way we would like it to play out, which is good. And of course, the key support level was hit, and that's where you'd be taking profit all day long. Like, you know that it was previous support, and it did bounce off very aggressively off that zone, and it's effectively done the same thing again. So realistically, a pretty good level to take profit, and yeah, the bounce is fairly straightforward. Look, it's coming into an interesting zone now, and there are certain obstacles that it needs to face before it certainly goes any longer, most of which are in the form of roll reversal zones and moving averages. Now, we've got the sloping neckline, as you know, of the head and shoulders. That may provide some resistance, but at the first stop, that might not be the one that actually stops it from going a little bit further. The aggressive roll reversal zone that more than likely will probably pull it up if it does break past this level is right there at around that 68.50 zone. So, you know, although it's still 40 pips away from that, it wouldn't surprise me to see it break past the inverse of the line neckline of the head and shoulders, and then come back and actually retest that from the bottom. So really, in a perfect world, if you wanted to the perfect setup here, it would probably go break past the neckline for a little bit, test the 20 moving average, and obviously that roll reversal zone around the 68.50, and then come and close down below the neckline. That would be a really optimal sign for more shorting opportunities next week, and the first target will obviously be the 67 cents, which has been the previous touch. But failing that, the only reason I'd be taking this long, if you're going to absolutely scalp this long, the real target's a 68.50. Okay, so the neckline is in the way, no question about that. But with the momentum that has kicked off from the base here, it wouldn't surprise me to see that break through. But this one's going to be a real problem for it. This blue line here, the 68.50, that should be a real problem for it because it is a very strong roll reversal zone, as you can see, very strong support right through there. So that is where I would expect it to be. The 20 moving average is fast approaching that level. It's currently sitting only 10 or 12 pips above that level anyway, and one more day would see it very, very close to it. So in realistic terms, it's got two very, very significant obstacles to go along, but it's also got the head and shoulders neckline right in front of it. If it gets past there, like I said, I think it's about 40 pips of scalping potential. And then after that, I'd be on the lookout for a reversal down to the 67-cent mark again. If it does happen to close above the 68.50 on a daily chart, so it closes above the moving average and the neckline, and of course the roll reversal zone, then we can start targeting the higher price brackets again at around that 70-cent mark. That's where it would most likely go to in the first instance, very highly likely actually, if it gets above the 68.50. So good trading on it, I think. We just have to basically watch out for the best move. I think a daily close above 68.50, we know we're aiming for the 70-cent mark at that point. And if it turns around and keels over at the 68.50 with the 20 moving average in the roll reversal zone, we start to target the 67-cent mark. So pretty straightforward trading on the Aussie USD. All right, we'll move over to the US dollar CAD now, and this one touched our levels as well, straight up to the 132 previous high. Technical. Look, the markets have been extraordinarily technical over the last few weeks. We've been really blessed with very, very good trading conditions. Even though the markets have been moving, they've been moving in a very orderly fashion, and this was no different. You can see that we hit the mark straight up, sold straight off it. It finds itself in a very interesting zone now, though. Like, it is at a level where this is the zone. If it's going to turn around, this is the turnaround zone. Okay, we've got a roll reversal zone, so we know we've got resistance right through here. That should provide us support now. The 20 moving average is also there, so we've got that bolstering potential support blow off from this level here. And we're talking about the level we're talking about is the 130.40 to 130.50 level. Okay, so any sign of strength from this level here, and we can anticipate that this level is going to hold. It's a very, very strong level. This is one of those things where you say, some people look for a short and say, all right, you might go to I'll give you an example. You might go to a 4-hour chart, for instance, and you might say, okay, we've got a series of lower highs and lower lows. We're on a downward trajectory. And normally, if it wasn't right at a roll reversal zone, you would say, well, that's absolutely true. We've got a momentum shift. And it may well be the case, but you just have to be very, very mindful that this level has to be broken before we actually start to target the lows. So, and what I mean by that is, if we get a daily close below say 130, then this level has been taken out. Okay, so we've got a roll reversal that's been taken out, a 20 moving average that's been taken out, but it must be a daily close that does that, not a 4-hour chart, not a 1-hour chart, not an 8-hour chart. It must be a daily, because that's the time frame that we're really operating on at the moment. That's the one we're doing all our analysis on. And when it's a very serious zone like that, you don't want to be, preempting it with a smaller time frame move. So that's what we're looking for. Look, we're about to potentially get a 2050 crossover on the 4-hour as well. So all these things are significant, but what it means is that we have to target the actual closes before we start to trade it. Now, we know that this is historically very, very strong level. Okay, if we get a close below the 20, like I said, below the 130 level, which is down here, then we can start to target the 128. 50 level, which is the next real support zone. Okay, so good trading and plenty of room, but it's one of those ones that you really have to wait for. If we get a 1 hour or a 2 hour or a 4-hour change of trend, so a series of higher highs and higher lows off this zone, I would be looking at targeting the highs again at around the 132. Okay, so change of trend at this level, we start to target the highs of 132 again, daily close below the 130, and we start to target the 128.50. So very, very straightforward trading on the CAD. It's been extraordinarily technical and very good to us. So yeah, good trading all around. US dollar yen is the strongest of the pairs that I can identify, even though the other ones have pulled back because of the dollar strength weakness. This one hasn't. It's effectively just pushing to new highs nearly every second day. We've had a couple of days of just sort of resetting here. Still, in my mind, it's reached a level now where I'd only be scalping 50 pips at a time. I wouldn't even be trying to attempt a massive short from here. The signal line is right in the middle of the histogram, as you can see. So, realistically, I would be expecting only 50 pip moves. Well, not expecting. That's what I'm targeting, because I think they're the easiest ones to predict. So, targeting 50 pip moves from this level. If we get a break above the 144.80 level, a daily break, then we start aiming for 50 pips above that, so it's effectively 155.20. And if we get a break below the 140, really the break I would want is actually below the 142.80. Then I'd start targeting 50 pips to the downside. But I would be very, very cautious not to be taking big attempts at this one. I'd be keeping the scalping short, because it is at a very, very interesting zone where the market can be very volatile. But I think if you keep your trade short, you're going to get in and out in an orderly fashion, and you may get multiple attempts at it. But it's been very, very strong. So really play the 50 pip game on this one, and you should be able to get a couple of decent scalps in. All right, dollar index now, and as you can see, we saw it hit a new recent high of 110.40 or slightly higher. It brought the euro to its knees, obviously, for a little period, but now it is starting to sell off a little bit. Again, though, this finds itself at a bit of a roll reversal zone. So whether it's the end for the dollar strength, I highly doubt it. I mean, it's certainly possible. I'm not going to say it's impossible, but realistically, this is what we're looking at. We've got a roll reversal zone at this level. If it's a shallow roll reversal zone, so I mean, it certainly may well test the 20 moving average, which is still effectively acceptable. I mean, you could draw that line there, or you could say, all right, you know what, maybe this base is the base. This is a zone. Okay, so anywhere in this zone is going to be a reasonable support level. I like it dropping it a little bit more, because it makes more sense for the 20 moving average. So I mean, what we're really looking for here is at about the realistically, to take the average at about 108 sort of 50 is the level that you'd be targeting. Another daily close, and you're going to see the 20 moving average catch up to that level anyway. But that's the level we're talking about. Obviously, all that noise around the majority, the middle zone of those candles, really right through there for about a week and a half, was at this level. Obviously, resistance here, broken through, and now we would fully expect it will find support around this level here. If it doesn't, that's the level it has to break for me to start looking at longs on the euro, or further longs on the euro. So if we get a break below the 108, and it's going to take a daily break below the 108 on the dollar index, then we can start looking at longs on the euro. But if we see a series of higher highs and higher lows on a smaller time frame, like the 1 hour or the 4 hour, anywhere in this zone between 108.50 and basically 109, anywhere in this zone, then we start to look at shorts on the euro again. So speaking of the euro, let's go straight to it. And this is what I'm talking about. This is the level that it's fast approaching. It's a little mini roll reversal in itself for it, trying to close above the 20 moving average, as you can see. This is a daily chart, of course. Histogram signal line is out of the histogram, as you can see. If we get a roll reversal at the 50 moving average, which coincides with the strength on the dollar index, this is a targeting area where we're going to be looking for shorts. But of course, a close above this level, and a daily close above 101.20, and then I'm going to start looking at longs up to the 102.80 level again. Okay, so the next real level for this is the 102.80. I'll bring this one over across there. That's the target that we'll be aiming for if we get a daily close above the 101.20 20 area. But if it turns over here and gets a series of lower highs and lower lows on a 4-hour or 1-hour chart, we can start targeting, in the first instance, 100 again, and then at an extreme, the high 98. So pretty good trading on the euro as well. This has been very, very technical as well. So, it's going to be one that you have to watch, wait for the daily closes to really give us the clue. But if it happens anytime in the next trading session next week is going to, pretty much depend on where we close. But gravitational pulls down to the 100 or the 102.80, depending on where the daily closes. All right, and the last one we'll have a look at is the S&P 500, of course. Perfect role reversal touch, as you can see. Support, resistance, resistance again. And it found support exactly where you would expect it would find support, around the 3,900. It's had a nice little bounce off from there. This is one of those ones where, look, we're still in, effectively early parts of September. If this was the low of September, then that's perfectly fine. It's done what we needed to do. We've shorted it to the area that we needed it to. So we can certainly work with that. But if there's more for the short to give, then we're going to know very, very soon. And by that, I mean, if we get a close above 4,100, which is the real zone, a 4,100 close on the daily, and I think the shorting opportunities are going to be over for this one, and the September weakness will be done and dusted, which is perfectly fine. But if it reverses anywhere in this zone, and that zone that I'm talking about is effectively anywhere between 41 and 41.50. If we see a roll reversal zone at that point, so we see a series of lower highs and lower lows on a 4-hour chart, a chart of significance, right? I'm not looking for a 15-minute move. A chart of significance, we're able to start targeting shorts down effectively to the 3,900 in the first instance. But a retouch of the 3,900, I think in my mind, would probably see weakness enough to get it down to the 3,750. So a daily break below 3,900, and we're going to start targeting the lows. Okay, and a daily close above, say, 41.20, which is above all these moving averages, and then we can start looking at the highs again, and then we can say maybe the weakness is over. But, it's going to depend on the trading session tonight. Let's just see how we go in the US. A daily close in either direction on those two moves is going to, I think, give us a really good trading week of trending next week in either direction. I'm not really biased either side. Happy to trade both sides because they are both very key levels and very key moving averages in their way. So you break those moving averages, and I would expect the shortness will be probably over for September. But of course, a keel over anywhere in this zone, and a series of lower highs and lower lows, and 3,900 is the first target, with 3,750 being the next target after that. So I hope everyone's had a great week's trading. Look, I think we've had some really, really good technicals. Our levels have held up, and from a technical standpoint, the market's been fantastic. So hopefully you were able to take advantage of that. Have an awesome weekend, and I look forward to seeing you all next week.